Hey team, today we're going to talk about Hims and Hers stock. So they recently announced their Q4 earnings call date. So I thought it would be a good time to actually go through their Q3 earnings report, refresh our memory a little bit and to see what the growth has been for the company up to date and what are some of the growth estimates going forward to see what we can expect from Q4 earnings and to also potentially see are there any drivers, are there any news that came out that might potentially help the company achieve or even exceed those growth estimates. So let's get straight into it. So I've got the earnings call, the Q3 earnings pack here. So we actually had that announcement coming out last week that the company would host a conference call around the Q4 earnings on the 22nd of February. So it's only roughly two weeks to go until we have finally some earnings that we're all waiting for. But this is the Q3 earnings report. So I thought it would be good to just see what sort of the growth has been for the company thus far, right? The first slide is basically the revenue growth that we had for the company. So we had massive exponential revenue growth over the last 2 years. So definitely COVID helped to some degree here. We had 136 compound annual growth rate, which is impressive. Last year-on-year growth was around 80%, which is I think similar to what we expect for 2021. Similar to that exponential growth, we had a huge improvement in gross margin. So as we see that, as we get more and more people to actually get on board and subscribe to the services, our margins expand because we don't spend the money of acquiring those customers. They're already acquired, they are retained, they have their subscription that keeps running on a monthly basis, and we do make large margins on those products. So basically, the longer the customer stays, the more margin we make as it's a cumulative effect of more people making more money with less costs involved. So we did see that 74% for the 2020 year, and I do think that we can expect a little bit more than that. It's been consistently above 70% margin for the 2021 year as well. So I think the expectation here will be around 75+%. But looking at the quarterly revenue growth since inception, so basically huge growth over that, just 2 years basically. We did have a consistent growth every quarter basically, and now we're expecting for the Q4 quarter, so the one will be announced in around 2 weeks, so ending 31st December 2021. We do have the expectation here of the company to reach 77 million compared to 74 million the quarter before. So I do think that, it seems quite realistic as such. It doesn't seem as onerous. And Q4 are usually where sales take up a bit because of the Christmas and holiday season. So I do think that the company might have been a bit conservative here, but we'll have to see about that. But it's definitely something that you can imagine doesn't look too onerous, right? It doesn't look too impressive as such, like that it would be out of the range of possibilities. And we do have analysts covering the stock as well. So we have currently 5 analysts, and their estimate is basically in line. So for 2021, we do have 64 million, which compares to the total estimate that the company is making of 263 to 265. So it's exactly in line with that, giving you a year-on-year growth of around 77 to 78%, which is to be expected. So I wouldn't be, this is really just, for me, it seems like that's the baseline, right? I don't expect the company at all to underperform that number. So I would be really surprised if they don't hit that target. So I do think we have good potential here for potential outperformance on the revenue on top line perspective. Also due to some of the news we're gonna go through here in a second. But what's also important to call out is that those 5 analysts, they actually only see the company growing 33% in this upcoming year and expect revenue number to only be 350. Whereas if we, apply the same type of growth number, we would go way above 400, would be more in like the 450 range. So they do cut it short, basically saying that some of that exponential growth that we've seen recently, if you look back here to the revenue number, so some of that growth here in that range, based on their conservative estimates, seems like they're saying this was due to COVID, was a bit of an exceptional situation here, and then a continued growth in 2021 as well. So it remains to be seen if we can actually outperform that, because it's basically saying that the company will now grow only half or less than half at the pace that they have been growing for the past 2 years or so. So I do think that, and even I do think it's kind of conservative for a smaller company to be growing at 33%, but also think about it. So even with that growth assumption, so basically saying, only 264 for this year, next year only 33%, even with that assumption, with that kind of more conservative assumption, they're giving it an average price target of $9.40, which is already more than double from the amount that we are currently in for $4.44. So even with that, quite conservative 30% growth rate, they probably pushed it out then further and decreases in their cash flow model. They probably put 33, 30, 25, 20, and so on to make it, conservative. As they grow, the growth rates get smaller. But even with that, we have a huge outperformance here on our hands. So it seems like a good price to be paying, with kind of almost limited downside, because even with those lower estimates here for 2021, I mean, if they actually post 30% for this year, that would be kind of almost disappointing for me. But even with that 30%, they're giving it such a high price target. So it seems to be, quite a good play. But in terms of this quarter, so we said that, that 265 is kind of like, seems like an easily achievable number. And then also we had a few key news that came out recently that, drives that revenue growth even further, in my opinion. So the first one came out end of November, so had 1 month of that basically, which is the partnership with Uber Eats to help, to make Hims and Hers products available on the Uber Eats platform in select cities such as LA, San Francisco, Sacramento, Miami, Dallas, Seattle, Atlanta, and so on. So they made it, overnight available on those platforms in those areas, that you can get your prescriptions and your products via Uber Eats, basically, to further enhance and just make the whole process easier of getting your products to you, which is, it is only a month worth. But given that people are mostly staying at home around that Christmas, New Year's period, it remains to be seen if this had a massive impact on the sales. But we know something, and that is that it won't hurt the sales. So if it had an impact, it will be a positive impact, And I don't think that by the time they had that Q3 earnings report where they made these assumptions, I don't think they probably had that even planned in, or even included that Uber partnership within their revenue estimates. But it remains to be seen if it had a significant impact. But even if they made a few millions only, because to outgrow that revenue number, you only need a few millions to be above 270, which would make a huge impression on the company already. It was a good growth, and now the company has outgrown even that nice growth of whatever it is, 70% on a year-to-year basis. If they get above 80% on a year-to-year basis of revenue growth, I think that would flag a lot of good green signals to potential investors that they're just outpacing even high growth assumptions. The next news that came out mid-November was that Hims and Hers offer their own. They have their own Amazon store online, basically offering their products on Amazon, which is obviously the largest retailer in the world. So I've actually went there and had a look around and see. Okay, yep, they do have all the products here. So we have Hims, we have Hers. I don't think it's all of their products, but we do have almost, the key ones, definitely the hair loss, sexual, skin products. For Hers, we have the hair products. We do have the vitamins that are quite popular, the chewy vitamins. And then, so I've looked through. I do see that there's not a massive amount of reviews yet, but the ones that are there, they all seem to be quite positive. And we definitely see that, they have their products launched there and they've been selling it as well. So you can expect there to be, especially around that Christmas time, you can expect there to be an uptick in revenue numbers coming from Amazon as well. So it is really a question of how much of that was incorporated, in that revenue number here that we have as an expectation for Q4. So we do have these two massive news coming out, and they are potentially key revenue drivers for 2021 as the Amazon store expands and more people are aware of that. And also the Uber Eats one. I mean, those are all huge platforms, right? Everyone worldwide knows about the Uber Eats platform, about Amazon stores. We did have other news coming out, which was after New Year's, so that wouldn't have affected Q3. But it's definitely key to be calling out for the, for future expectations, for maybe the guidance that the company will issue in their Q4 earnings report, the guidance for 2022. So we did have that, Hims and Hers products collaborating with Walmart to launch into 1,400 stores and online. And I did have you can have a look on Walmart's. Obviously, if you can spot those products already. I haven't really made any research of that, but I do think that going forward we'll see those products on here. And then the other news is that we had two new products added to prescription services for dermatology related products for women, which obviously means just expansion of their product suite. And then one big news that we had was that Hims and Hers offered a new, or made their new mobile platform available in the App Store, which will definitely be a key driver of converting way more sales, will be more easily to kind of manage your subscription online and to actually order and get the products you want. So I do think that this is a key step for the company in 2022. But it remains to be seen how well this has been adhered to and received by the customers. But those are all massive news. I mean, think about it, right? We have a brand new app coming to the App Store. We have product expansions. We have collaborations with Walmart, Amazon, and Uber, which are just massive names in that space, so that they're able to even cooperate with them and collaborate with them. It's just amazing. And it will have a positive impact on the revenue numbers. So, me personally, I would be very surprised if their guidance is 350. I do think we will see an uptick in guidance, but let's see how conservative management is here. I mean, we know that some of them, like Facebook, they always try to play everything down to then surprise to the upside when earnings is coming. But the stock had a lot of negative sentiment, like Hims and Hers stock. I mean, we've seen it, right, going down like massively over the last 6 months, or actually last year almost. So that maybe we will see a little bit more of the company in terms of optimism towards the stock to actually bump up that sentiment around it. So if we do see an uptick here in the 350, that's obviously something we would be very positively, would have a really positive effect on the stock price. And also a small beat here, if it's 270 million or something like that, I do think that would be, and it pushes it over the 80% growth rate, I think that would be very, very good. And one final thing we obviously also have to talk about is, so now we just discussed the revenue side, right? But what else is there in the profit and loss? And that's definitely the cost. So if we go to financials, yeah, we did have a lot of costs, going forward that they actually didn't here show, but we need to see that in the financials. So huge, marketing and selling expenses. So in terms of that revenue growth, we had like over 100 million of marketing expenses. So as they're trying to grow their business and they grow their brand awareness, they've spent a lot of money on marketing. So yeah, this is definitely something we wanted to see down ticking. And at the end of the day, what we're really after is subscription numbers to see consistently growing over the years as it has been growing over the past years. With those subscription numbers, ideally we would also have the average order volume to keep going up, to actually see that we will have the growing subscriptions for which, once we've got the subscription, we don't have to pay again any marketing expenditures, so that the additional subscription over the long run will actually produce way more revenue, right? And then maybe even because we expand the offering and the products, that every order volume, the average order volume of those subscriptions will also increase, making the company more profitable, increasing gross margin. I mean, this is what they've been doing. We have the average order volume going up while subscription also has gone up, basically having a positive impact on the margins. With less expenditure, with less marketing expenditure, we do have a larger margin in the end. And this is also one of the slides that they've shown. It's further down here actually. They basically show you that whoever entered in 2018, 19 and 20, we do see that by the third year, we do have, of the people that entered or ordered their first product in 2018, we do have a $91 remaining revenue, which means an 88% revenue retention. Whilst the newer ones from 2020, their first 12 months order volume is already at $363. So it's like triple the amount of what they used to do for these other years, or at least double from last year. So we do want to see the exponential growth in subscription numbers, order volume, margin will go up, and basically marketing expenses going down, making the company profitable. So yeah, this is all I wanted to discuss with you guys. I hope you liked it. Please consider subscribing and liking the video. Please let me know if what you are expecting to see from the Q4 earnings and HIMSS. What is your important metric that you are measuring or that you are tracking to see if the company is performing in line with your expectations? Leave me a comment below and see you next time.